Good day. By the end of this presentation, you should have a pretty good idea about how you too can create long-term wealth by owning some great Canadian businesses. Hi, I'm Gordon Weeb. I'm a licensed underwriter in the provinces of BC, Alberta, and Saskatchewan. I help clients achieve their goals and objectives, typically through the use of annuities. Just before we begin, regulations require the following safe harbor. This presentation is produced and published on and around August 12, 2020. It is for illustration purposes only. This is not an offer to purchase securities or products. No representation is made, and items here may not be suitable for everyone. Values will fluctuate. Please consult an experienced qualified licensed professional prior to investing or employing strategies to ensure that your investments are part of a comprehensive plan designed to help you and your family meet your long-term goals and objectives. When recommending products and planning strategies, broad and tax legal issues may be discussed. Nothing should be construed as tax or legal advice. Here's our agenda. Number one, I'll share my outlook on business. That way, if we're not on the same page, we won't be wasting each other's time. Number two, we'll look at some of the people involved in the process. Number three, we'll look at some of the quality businesses we like to own. Number four, we'll examine some of the potential risks associated with investing. And number five, we'll review our presentation and you can decide if there's room for us to partner and grow your family's wealth. Here are some of the wealthiest Canadians. And here are some of the wealthiest Americans. Now, if you were going to go about creating long-term wealth for you and your family, it might make sense to study how these individuals acquired their wealth. So rather than reinvent the wheel, here's the prescription from Warren Buffett. He said, your goal as an investor should simply be to purchase at a rational price a part interest in an easily understandable business whose earnings are virtually certain to be materially higher 5, 10, 20 years from now. Put together a portfolio of companies whose aggregate earnings march upward over the years, and so will the portfolio's value. And if we were to ask Mr. Buffett for some further advice on managing capital, he might suggest the following principles. Number one, preserve capital. Invest in quality growing long-term assets. Number two, protect your capital. Avoid frictional costs like taxes and fees and potential liabilities. Number three, propagate your capital. A great business has the power to grow and compound shareholders' equity over the long term. And number four, plan your capital deployment. In other words, set short, medium, and long-term goals and allocate and deploy your funds accordingly. Having established a capital management philosophy, here's the team to help you implement it. That's me, Gordon Weeb, on the lower half of the slide, and that's Mark Gagnon, Vice President and Principal Portfolio Manager at Industrial Alliance Management. I like working with Mark because he's looking for quality businesses with strong earnings and free cash flow, and he's thinking long term. I think Mr. Buffett would approve. Now let's take a look at how that capital is managed. The portfolio includes some outstanding businesses. The granddaddy of all Canadian businesses is the Royal Bank of Canada, or RBC. They are the nation's largest lender to consumers and businesses. Last year, RBC reported profits well in excess of $13 billion. And for the past 10 years, they've been able to reward shareholders by growing their dividends at about 7% per year. The portfolio is also invested in other Canadian banks and financial institutions. Safely transporting Canadian energy resources is another long-term strategy of the fund. Two additional companies include Enbridge and TC Energy, formerly known as TransCanada. Combined, these two companies transport about 85% of Canada's oil resources to the United States, and they transport about half of all the natural gas in North America. As per Mr. Buffett's directive, they consistently grow their earnings and reward shareholders with a steady stream of rising dividends. CN Rail is another company held in our portfolio, and it is an example of an excellent company by virtue of its barriers to entry. Every year they ship about $250 billion worth of freight, and they're able to service 9 ports across North America. The barriers to entry, it would be very difficult for another company to start up or to compete with CN Rail. Not surprisingly, over the last 5 years, CN Rail has rewarded shareholders by compounding their earnings at about 14% annually. Utility companies like Fortis are also held in the portfolio. Fortis has increased their dividends for the last 46 years in a row. They have the longest track record of doing this of any Canadian company. That should give us a pretty good indication about how we preserve capital. We also have a plan for protecting your capital, and that is achieved in a number of ways. Because we expect these businesses to perform well over the long term, there's no reason to buy, sell, or trade in and out. That protects unit holders from needless capital gain taxes, sales expenses, or administrative fees. An insurance contract structure provides the following features. The underwriter will guarantee 75% of your principal investment if the investment performs poorly over the next decade. And, should you not survive the next 10 years, the underwriter will guarantee your beneficiaries receive a minimum 75 or 100% of your principal investment. You choose the amount when you sign the contract. And speaking of the death benefit, an additional feature means your capital bypasses the probate process. That might not seem like a big deal, but consider this. Legal fees and government probate fees will be kept to a minimum, and the transfer of your assets will be kept confidential. What business owners and property owners often overlook is that the probate process is a public process. During the probate process, all of your assets must be listed and disclosed so creditors can make a claim against your estate. Another item that is often overlooked is BC's Wills and Variation Act. That act could enable disenchanted relatives to contest your will. That would mean transfer delays, higher legal and probate fees. It could also mean that the court intervenes and your assets aren't necessarily distributed according to your wishes. That's hardly desirable. If you're a professional, an executive, a business owner, or a landlord, you could be subject to countless potential lawsuits and liabilities. However, when you hold your capital in a contract with a Canadian insurance company, you benefit from a degree of creditor protection not afforded to any other type of investment or investment class. In 1996, the Supreme Court of Canada ruled that investments wrapped in an insurance contract receive special protection provided the assets are governed by insurance legislation, a preferred class of beneficiary is named, and third, there is no evidence of a fraudulent conveyance, a legal term meaning that you're attempting to hide the assets from creditors. Speaking of fees, here's a breakdown of annual fees you might expect to pay. Should you prefer the 100% death benefit guarantee, management costs are slightly more. The performance figures are reported on an after-fee basis. So, as of July 31st, 2020, the portfolio had an annual compounded rate of return of about 6 2/3% over the last 10 years. That's no guarantee of future performance, but it could be used as a benchmark for planning purposes. So let's review. If your objective is to acquire and grow your family's wealth, owning a portfolio of quality Canadian businesses makes sense. There are several benefits to holding these assets inside a contract with an insurance company, and if you sign on, I hope you view yourself as a non-managing partner in some excellent companies. If you reside in BC or Alberta and you're interested in buying in, you can contact me, Gordon Weeb, at gord@think.com. More information is also available at www.think-income.com.